Ladies and gentlemen, good day and welcome to the Sonata Software Limited Q1 FY22 Results Update Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Srikar Reddy from Sonata Software Limited. Thank you, and over to you, sir.
Yeah, thank you, Fizan, and good morning, everybody who have joined us today for the analyst call post the announcement of our results for Q1 FY22 yesterday. I have with me today Mr. Jagannathan, our CFO, Mr. Satyanarayana, our Head of Finance, Mr. Raju, Chief Delivery Officer, Mr. Sujit Manti, Head of our India Business, and Mr. Ranganath Puranik, our Chief Growth Officer from the US. Before I hand over the mic to Jagan to take you in greater detail the financials which have been already loaded and released to the stock exchanges yesterday, I'll share some quick highlights and talking points for the business performance for the quarter. So overall in the quarter, I think the demand side has looked extremely robust. Our deal flow and pipeline across the board, apart from the travel vertical, has looked good. So overall, I think that looks promising. As I did mention last time that we had some in the supply side headwind, both starting with the COVID-related and people falling sick and not being available to do work, and managing the additional supply side dynamics of getting more people. Our attrition has been a little higher than the normal. I think it's been close to 20% last quarter. So these have actually, I would say, prevented us from delivering to the demand which was there in the quarter. We are absolutely putting in plans to sort out the supply side, both from retention and creation of capacity in advance, and also opening up closer global delivery centers, both from a risk minimization aspect, which our clients were looking for, and not wanting to be limited to one or two country-specific delivery centers. There are local regulations which are coming in, especially in Europe, which is preventing, I would say, some data to go out of Europe. And third is get access to talent. So we have put together a very comprehensive plan to execute on the supply side dynamics. We have a one-time revenue gain last quarter because of the provision we had made for the provident fund, which was no more required when we transferred the fund. But also we have had, I think, I would say, based on whatever I just explained, a lot of expenses which would not be normal, which were both COVID-related, capacity expansion exercises, and also additional expenses we had to incur. We took additional medical insurances, additional life insurances for COVID specific, and a lot more support to our people over and above the insurance cost, which could be repaid on COVID. So those, I think, one time, I would say, costs have, I would say, cancelled for the one-time gain which we have obtained on the reversal of the provision which I had made for the provident fund. Looking forward, as I said, the supply side, the demand side looks robust, and the focus for us is really is to manage the supply better in the next 2 quarters. So I think that's where we are focused on as an organization. We have continued to invest, hired some senior resources. We've hired Karthik Vishweshwaran as the Senior Vice President and Chief Digital Officer, driving both transformation of the digital of our current clients and large digital opportunities going forward. So we're creating that unit around him. He came on board this month. We've hired a head of sales for the Australia region, Biju John, again, very experienced professional, more than 20 years in the Australian market. And then I think we've had another 10, 12 people on site, both for sales, pre-sales last quarter. So we continue to invest. The other, I think, interesting aspect which we announced last week is the acquisition of Encore Software Services based out of San Jose in the U.S. with a delivery center in Chennai. That's a very qualitative level. One is it's a very robust business, solid set of clients. The management team is very experienced and veteran of the industry, and having set up and run from the late 80s, early 90s, these kind of operations. So very solid management team. Gets us access into new industry vertical, mainly on the healthcare providers and the logistics, and an access to a new delivery center in Chennai. I think overall, I think on a full quarter basis, that should be adding about $50 million to the revenue on a full quarter basis, maybe about 500K of EBITDA to the bottom line as we go forward. The GBW business, the CX business, as I said last time, looks extremely promising. Obviously, they are impacted by the opening and closure of markets in different parts of the world. And they've had, I think, last quarter focus on, I think, ramping up capacity to serve the new clients they have acquired. So there was also an impact on their margins last quarter. So overall, and our India business looks extremely promising, continues to grow. The cloud business starts to grow. The annuity business is growing. And the new lines of alliances that we talked about, like Amazon, Google, and the SI business continue to show promise. So that looks extremely robust and should continue its growth trend. So as a net, I would say as a summary, I think the demand side looks good. We are all focused in the next few quarters on ensuring that we have a good, solid supply side and robust engine operational, and that's what we are focused on. So that's, I would say, in a nutshell, a summary of the performance for the quarter and where we are, and some of the highlights for the quarter. I'll hand it over to Jagan to take you through the detailed financials, and then have any answers to any questions you may have. Thank you all again very much.
Thank you, Speaker. Good morning, all. It's nice connecting with all of you today morning. Thanks for joining the call today morning. I will now take you through the brief financial performance for the quarter for our business. Then the speaker will, after that, the questions will start for that. The consolidated financial performance for the quarter, we had a revenue CQGR growth of 5.2% and EBITDA CQGR growth of 3.7% and PAT CQGR of 3.5%. Our PAT has grown well compared to the revenue growth for this quarter on a consolidated basis. The international services, the revenue growth revenue growth CQGR was 1.8%, and in dollar terms it was 1.5%, and in constant currency it was about 1%. The EBITDA and PAT, the EBITDA growth was 3.2% and PAT growth was 2.5% for the quarter. The domestic business, The revenue growth was 6.6%. EBITDA CQGR growth was 5.7%. If you see, interestingly, our speaker has been highlighting that domestic business has to be measured on gross contribution, not on the revenue. Our gross contribution has grown by 3.8% CQGR for this quarter. Our PAT has grown on a healthy 6.8% quarter on quarter. The financial summary, this is uploaded also. We will cover this when we have broadly highlighted the revenue growth. We had the revenue of 323.9 crores in INR terms this quarter, and the domestic business was 946.2 crores this quarter. The EBITDA, the PAT for this quarter has been 86.7 crores compared to 83.1 crores last quarter. The operational performance, US business continued to be at 51% of our total revenue, and Europe is, including UK, is about 25%, and the rest of world remains at 24%. There is no change in this. This quarter, if you see the contribution from ISC industry continue to be at 33%, and the travel vertical continues to be at 10%. Not much of change in this quarter for any of these major verticals other than others. Others is the rest of verticals like utility services, agri-tech, and all those things are there. The common our key verticals have remained at the same level as quarter 4. The revenue competency wise has also been given here. So the strong momentum, strong revenue potential is reflected in that. The high digital services is contributed to the business growth for this quarter also. The Microsoft services and the digital platform services continue to be the focus area which has contributed to the major revenue for us. The on-site offshore mix for this quarter remained at the same level, and there is no change on the mix between T&M and fixed price project for this quarter. The IP-led revenue continues to be growing for us. It is remaining strongly at 35% for this quarter. The operation metrics, new customer additions. If you see, we had a strong customer addition during this quarter. This quarter, we see the potential, the demand side, as Shikhar was highlighting, the demand side continues to be good. There have been some constraints on utilization and people addition for us on the supply side, which we are addressing in the coming quarter. The client addition has been very healthy for us in this quarter. We have added 13 clients during this quarter. The top 5 clients continue to contribute more. However, the headcount addition has also been healthy. We have added around 240 people in this quarter, which is almost like a 5% of our headcount on this quarter. As Shikhar was mentioning, we have also added on-site and sales headcount has been beefed up during this quarter. With this, my update on financials comes to an end. I hand it over back for the question answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. First question is from the line of Mohit Jain from Anand Rathi. Please go ahead.
Hi sir, good morning. First is regarding the top line versus non-top. So there appears to be this big decline in others or from non-top 5 clients, so to say, or maybe non-top 10. So what happened there during the quarter, and what kind of recovery should we expect from 2Q onward?
Sorry, I didn't understand. What is the question?
See, top 10 and top 5 clients have grown well. Top 5 essentially have done very well. But if you look beyond top 10, there was a big decline in the quarter. The point was, is there something specific that happened in that segment where we saw a big decline for the quarter, or some completion, some client loss, or something of that sort? So that is one regarding this quarter, which is 1Q22. And then what kind of recovery should we expect in IT services from second quarter onwards?
Right. I think, yeah, I mean, we have to analyze the individual details of each client and, what happened, whether it was a supply side issue or whether it was some project ending and then we're waiting for the ramp up for the next one to start. So we can give you that detailed analytics. But as I said, for us, the demand side looks extremely robust, and if we manage the supply side well, we should go back to the kind of top line and bottom line growth, even factoring in for additional costs which may come in to get our supply side correct and manage it well. So as we sit here today, I think the growth going forward looks promising based on the deal flow we have currently and actually orders which are booked, which are waiting to be executed, and the supply and the demand pipeline which we are visualizing kind of stuff. So overall, I would say I think we're quite optimistic about getting back to about a 3 or 4% growth quarter on quarter.
Okay. And so second was on the IT services segment margin. So in terms of cost increases and utilization has just started coming off a bit. Should we expect that margins structurally will be like a little lower this year, and therefore our historical numbers may not give us the correct picture? Or do you think that this quarter had enough one-off to sort of factor off any potential headwinds?
I mean, I would say that the top line and bottom line may have a more linear growth. Earlier, we could have had a little more non-linear growth, that every percentage of top line could have had maybe a 1.1% increase in bottom line kind of stuff. So factoring on all that, even if you have these one-time adjusted for this quarter, but because I think we are going to be doing 2 or 3 or 4 things actually. One is all these global centers we are going to be opening up will add to the initial ramp-up cost. I mean, once they stabilize, they'll start driving the revenues, but there will be initial ramp-up costs as we create a certain capacity in each of these places. The secondly, as I said, we're going to be hiring in advance. I mean, so that we don't get surprised by this kind of stuff going forward, and preparing talent rather than waiting for business and then getting talent. So that could add to some kind of cost pressures. So I would, as we sit here today, would look at a more linear relationship between absolute margin growth and absolute revenue growth. So that's what I would forecast as we sit here today.
Okay. And sir, something on the acquisition side, like what are the details there in terms of any growth numbers? It appears that you got it at a very good price. So what are the details?
That I don't know. Don't say it loudly.
I'm saying, so any details that you can give in terms of growth or margin?
So,
or
as I said, see, it's about, I guess, about a $15 million, $14 million annuity business. I think it has an EBITDA of about 15-18%. And it's a very steady business, annuity and so on and so forth. So the growth really comes from 2 or 3 possibilities. One is, what else can we do to these clients? Because these clients could have earlier been restricted by the size of the company to expand and grow into more areas and do more. So that's one possibility. The second possibility is for them now with a bigger balance sheet and a larger company behind them to go for larger deals in their same verticals which they are currently waiting in. So these are the 2 things. We are not seeing any cost to us. That means we'll take any of theirs to our clients. But these are the 2, I guess, big growth drivers to that business. But as I said, the business is a very robust business. So it's a very solid business, a very, very, very experienced management team. Business has been in existence for more than 12, 13 years. They've all, as I said, ran these big operations for companies like Intel and so on and so forth. So overall, very sound management team, very experienced in running this kind of business. And as I said, this access to the whole Chennai now is in the current context of supply side will will hopefully reduce the pressure on that. So I hope I've shared enough information with you, Mohit.
Yeah, so there is no change in working capital or anything of that sort when you acquired that entity. That is pretty much
No. They were cash surplus actually. So we returned cash. I mean, so no working capital. No.
Okay. And so last on domestic side, this quarter obviously you saw this expansion because of the depressed last quarter as well. What kind of growth you're looking at for the domestic business?
Domestic this quarter, I think the margin we grew, I think on the gross contribution side, my feeling is we almost grew 8 to 10%, I think. So we'll continue to look at that. I think at least 5 to 6% gross margin growth. Or maybe this quarter maybe 3 to 4%, but I think Q3 looks extremely promising, and Q4 may not be as good as Q3, but still far better than Q2. So I think that business looks very solid. So we should grow like 4-5% quarter on quarter.
4-5% when you look at EBITDA of the domestic business. Is that what you're referring to, or?
Well, yeah, EBITDA, yeah, absolutely.
Absolute EBITDA on a quarter.
Right.
Okay. Thank you, sir, and all the best.
Thank you, Mohit.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Srikhar, hi, good morning, good quarter. I'm sorry if this is a repetition and I missed this in your opening comments. The sequential growth in our Microsoft services, is sharply below Microsoft's own growth. I'm just trying to understand, is this a supply side issue from our end?
Yeah, it is. That's what I made at the beginning. It is a supply side issue, not a demand side issue.
Got it. Fine. What's the commentary from your from TUI coming on in the context of what's happened in Q1 in Europe?
Like maybe now this Delta variant and markets are opening up, shutting down. Spain opened up, Spain shut down. So it still looks, let's say, wavy. I mean, my feeling is, as I said last time, I said second half. So now we are looking at even January kind of stuff. But it's finally, I mean, the disease has to either stabilize or has to reasonably go away. I mean, otherwise, obviously, people are not that keen on taking holidays. If either they go to the other side and we are quarantined, or come back and are quarantined in their home country kind of stuff. And those rules are still extremely unpredictable as we speak today.
Sure.
And they, as I said, they continue to invest in that thing. So that's stable. So what I said last time is the growth will come when their operations start. Right now they're not running any systems, more or less. They're like 20% operational. So the operation, the revenues from the operational systems and support of that's what is going to give the bump up, and that we have to wait. Otherwise, whatever they're investing for the future, that's carrying on.
Sure. Just a bookkeeping question for Jagan. What was the EBITDA before other income and FX for our IT services business? And going forward, if it's possible to kind of report this on a standalone basis, it will make interpretation really that much better. Jagan?
Hey, sorry, I didn't. Your voice was a little feeble. Can you repeat the question, please?
Yeah, my question was, what was your EBITDA margin before other income and FX in your international services business? And going forward, I was opining if it was possible to just report that on a standalone basis, pre other income.
Yes, definitely. Pre other income, the EBITDA margins will remain at the same level. In fact, there can be a little improvement also from that. So the business as such hasn't, in spite of all the cost increases and as Srikhar was mentioning, we are trying to beef up the resources to back up for the existing people to protect the revenue.
What's the margin? My question was, what's the margin?
Margin will be somewhere, the EBITDA, reported EBITDA is somewhere around 27.5%. This should be close to 25-26% on this.
25-26. This is pre-impact of other income.
Yeah. Without other income impact, forex impact, without that.
Okay, got it. And
this quarter, it may be a little more because of the, as Shikhar was telling, on the PF reversal was there. If then on a normalized basis, this will be the margin. Around 25% you can take.
25, sure. And lastly, congrats on the sharp ramp up in the annuity portion of your domestic business. How should we see the gross contribution from whatever is annuity? How should we understand the margin curve of this business better?
Sorry, I didn't get the question.
So I'm just trying to understand in terms of the annuity business in your domestic product reselling. What are the gross margins we make on that business? How should we understand the profitability of this better? Yeah.
It's safe to assume that it's the same gross margin. Instead of saying that one has got a higher gross margin than the other, it's just that one has more predictability than the other.
Sure. And it's fair to assume that, the ramp up in your annuity and the cloud is almost similar in terms of salience. So is the interpretation right that whatever is annuity is necessarily driven by cloud ramp ups and that obviously has a long runway of growth going forward?
Yes, at a high level, even earlier the contracts were for 3 years, but now the cloud contracts are a little bit more stickier than a purely a volume licensing contract, when the both were for the long-term kind of thing. So that's a good assumption to make by the.
Okay, and what would our cloud mix be? I'm assuming Azure would be number one.
Yeah, Azure would be. Azure is still way above. The Amazon and Google are just something we started like 6 to 9 months ago. They're like the huge runway businesses. But the Azure and the Azure related cloud would still be significant.
All right. Thank you very much.
Thank you. The next question is from the line of Prakash Chelam from Marathon Edge. Please go ahead.
Hi, thanks for taking my question. Just wanted to understand, if you talk about your domestic business, could you just give us a sense of what contribution does MS Azure reselling do to the business? And what sort of profitability and credit risks do you see in that, given this whole growth wave that we are seeing in the cloud demand in India? Thank you.
Okay, I don't know. Sujit, are you on the call? Can you take that question?
Hello, can you hear me?
Yeah.
Yes, I can hear you.
Yeah. If you don't mind, can you just repeat the question again?
So in the domestic business, we are seeing a huge shift towards cloud globally and in India. Given that you have a strong relationship with Microsoft, can you just give me a sense of what is the contribution of Microsoft Cloud Azure reselling within your domestic business? What sort of growth you're seeing on it? And is the profitability profile there extremely different from the rest of your domestic business? If you could just comment on that, please. Thank you.
Sure, thanks. So in Microsoft business, when with most of the customers, whether it is Microsoft or partners like us, for us, MS Azure business is one of the key drivers. So anytime we go for a contract, MS Azure is a very critical component of the contract, and most of the volume growth will come from that, because the consumption of the cloud is one of the very key things which OEM like Microsoft will always focus on. So that will always be a growth driver. Now coming to the profitability, it is there's nothing very specific about this particular product line. In Microsoft, they have 4 business lines. This is one of them. So when you sign a contract, that the overall profitability, there is nothing specific that we have to mention about this particular business line. And in future, as I said, we continue to believe that this is one of the growth drivers. And in most of our large contracts, Azure will have a major play as far as the percentage of that business from the customer is concerned.
If you could just progress on that a little further. Do you do any other cloud reselling apart from Azure? Do you sell AWS or Google?
Yes,
or somebody else?
Yes, we do AWS.
But the majority is okay. And wouldn't that business be sub 10% sort of EBITDA margins with credit risk, or is it higher than that? And is it substantially higher than the rest of your distribution business or domestic India business from a margin perspective?
Yeah, from margin perspective, if you see it, any of the cloud business in Indian market, the retention margins are almost same in each of the business, whether it is AWS, whether it is Google, whether it is Microsoft. As far as risk are concerned, it's a customer risk. It has nothing specifically to do with any OEM. So when you get into a business, that due diligence and that evaluation process which you do before getting into a contract, whether we should go with this contract or not, that remains same irrespective of the technology or the OEM which the customer is looking for.
And could you give me a sense of, you said that the margin profile is similar across the three providers, cloud providers, if you do reselling and value-added reselling. Could you give me a sense of what sort of EBITDA margins are we talking about? Are we talking about 5, 7, 10%? And second, when you say you're seeing tremendous potential there, are we talking about 100% plus sort of growth rate that you're seeing in India year on year, or more like 50 on the cloud component reselling? And third, how much is cloud today for you in this 300 million odd that you do in the domestic India business?
Let me just take one question. Our EBITDA margins are as published is about 2.5% in the business, Baidik. Yeah. So I'll hand over the rest of the questions.
For the cloud portion of it, is that higher than the overall business, or is it lower?
No, it is not significantly higher. It could be marginally higher, but it's not like 2.5% and 5%. No.
Got it. Okay. All right. And what component of your business is it, and what sort of growth rates are you enjoying of the domestic businesses? Cloud reselling?
So today
that 70-odd% is cloud business now, Baidik. That's in the investor deck, 74% or whatever. Yeah.
73%. Yeah.
73%. Yeah.
So, 73%. When you say cloud, is it just cloud hosting reselling, or does it include cloud software products?
This includes the cloud software products also, not just all the three. IaaS, SaaS, and PaaS.
Okay. And what would the cloud, just the hosting platform portion be out of this? And because there's just demand for people just shifting space onto the cloud, right? So is this a large portion of the 73%? Or
still a very large portion is still the IaaS part, infrastructure as a service.
Which is the hosting piece, is that right?
That's right.
Okay, got it. And so the overall growth rate of domestic business probably mirrors that.
The growth
rate of cloud in the industry piece.
Yeah.
Great. Thank you so much. My questions are answered. Thank you very much.
Thank you. The next question is from the line of NG Puranik from Enam Securities. Please go ahead.
Hi, Srikar.
Hi, Puranik. How are you?
Good. A great quarter as always. Nice to see you bringing in some interesting changes to your businesses. So I want to understand the Encore acquisition from what that will do to you. One is they bring the current relationships and current businesses to you. So in terms of service line, will they add to your service line? Because at the end of the day, when you go and sell your services, the larger deal is a function of number of service lines you have. And that too, high-spend service lines, mission-critical service lines, and new service lines. Combination will make the deal larger, and that will in turn help you grow your $1 million account and creates a platform for size and scale. So I want to understand this. Will they add to any services? Then the vertical also will have a greater meaning.
Right. As I said, all the things you said are all correct. That they are a robust business. They bring the client. They bring the vertical knowledge. They get access to these vertical industries. I think one thing they bring, which we already have, I think which can be a good combination, at least in the US market, is their cloud horizontal capability. I think that should combine the story of the overall cloud services strategy in the US.
So what do you mean by cloud horizontal? Is that an effective migration service? Cloud migration services?
Mainly, cloud migration, cloud development.
Cloud migration and development.
Cloud development, native cloud development, cloud migration. They are both in the Azure space and the Amazon space.
Okay. So when you say cloud development, what exactly happens there?
People want to build, either modernize their current on-prem apps on the cloud. So that means you need to re-architect those apps. You can't. One is a lift and shift. They just move it as it is.
Now, is it building applications on cloud, or is it?
It is either re-architecting existing applications on the cloud or building brand new applications on the cloud.
Building brand new applications.
Both.
Oh, I see. So the larger percentage of their business comes from what? Development? Cloud development?
Development and testing, yes. It's not on the implementation and other things.
So in a way, it will add to your new service line.
That's right. That's correct.
So that can add to what kind of a service contract size? For example, if you are bidding a customer for 2 to 5 million, will that take you to 5 to 10 million?
Yes, they can themselves go and bid for those now because of the balance sheet side and nothing else.
They can themselves. So another
shy of going to larger customers because somebody is saying you're only 15, 18 million, so how can I give you?
So what's the kind of names they are bringing to you? Fortune 500 companies?
Their names are on their website, Puranik.
Oh, I see.
They're all in the mid-size provider space.
Mid-size provider. That is Fortune 1000.
$1 to $5 billion revenue.
$1 to $5 billion. Oh, I see. Yeah. So, and how many clients they have? $1 to $5 billion?
The $1 to $5 billion, they will have about 6 clients.
6 clients. One other question in this connection I have is, you said they're in the business from 80s to till now.
Yes.
It's nice to be staying relevant for so many years. Being a legacy player and modernize yourself and stay current and relevant. But I want to understand why after 30 years their revenue is only $15 million.
No. Their business, no. I said they ran Concall and all that. They set up one other business which they sold off to somebody. This is their third venture. Yeah.
This is third venture. How old is this venture?
This venture is 11 years old.
11 years old. Not bad. $15 million. $1 million per year.
Yeah.
So that's not a bad number. So what? Have you time for another question or time out?
No, go ahead. Okay. I don't know what the queue is. Yeah.
Right. So I want to know from a platformization perspective. You have a range of services you offer in the platform. Isn't it? So are they the total platform service or is it components of various services?
They are mainly on the custom development of platform service. The one pillar.
Okay. So for you, it comes under the P&L side or on the revenue side?
I didn't understand.
No, does it go to reduce your effort of value of services delivered, or you treat it as a license revenue? You license the platform.
No, there's no platform. No. This is just development. This is development services. They don't have any license.
I'm talking about your platform services.
Our platform has 3 components, like I said. One is our own platform. If people take it, we license it. Otherwise, we are using, let's say, Microsoft Dynamics or whatever and deploying it and building on top. That is the second service. So even only in the first one do we get a license to run it.
And your platform is also your own productivity tool.
The platformation service will use our productivity.
Your productivity tool. Okay. Yeah. So that you charge it to the client.
No, it's hidden. You don't specifically charge.
Separately or in aggregate?
No, if we license our platform, then we charge. But if we use our tool frameworks, we don't charge. It's
correct. I understand.
Quality and faster time turnaround and all that may add to our margin.
Right. Yeah. Interesting. Sorry, as far as India business, I want to have a question. Is there a cloud-based services, all the cloud licenses you sell?
Yes. There are
cloud service.
Because of the license values being so high, the services get lost. That's all I'm saying. It can never catch up. Even if the services doubles every quarter, the impact will make on the margin or the revenue is going to take a long time.
Okay. So it won't be a significant percentage. Say it can't be 5% because the license value is high. What you're saying is license value is high. But even if it is 3, 4, 5% of license value, it will add to your bottom line.
It won't show up in the margin. That's all I'm trying to say.
Right. Thanks, Vikas. Have a great time. Bye.
Thank you. Participants, to ask a question, you may press star and one. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. I just want some color how you define this platformation service, digital service. Means every company defines it differently. So if you can give some color, it will be very helpful.
Platformation service only we can define because it's a trademark item of Sonata. Nobody else can do this.
In your slide number 23, you have...
I know. So when we say platformation customer, that means the concept of platformation has been sold to the customer. So the customer is bought platformation from us. So when you deliver platformation, then under platformation, either we have to deliver our IP services or we have to deliver digital services. Yeah. So that's why we are showing our platformation client separately and the digital services revenue separately and IP-led services revenue separately. Did I communicate?
Still couldn't understand. If you would elaborate it, it will be highly useful, sir.
All digital services and IP services need not be platformation services. Clear?
Yeah.
But all platformation services will definitely be digital services.
Okay, sir. Got it. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Rajiv Venkatesh, individual investor. Please go ahead.
Hi, Srikhar. Good day. I have one question on the business side. If my understanding is right, we onboard the customer for digital platformation services, and I just want to understand what percentage of the customers get converted to data and analytics and other services where we push our products like SaaS and multi-annuity license sales. My assumption here is we are working here with the top of the margins when it comes to our own products. So can you just comment on this particular thing?
Okay. I didn't get your drift of your question. Maybe one question at a time.
There's only one question. Like we onboard the customer for digital platformation services. I want to understand what percentage of the customers get converted to data and analytics and where we push our products like SaaS and other multi-annuity license sales.
Okay. So as I said, when we have a platformation customer, we can do either of three things to them. Either we license our platform to them, or we deploy another platform on the cloud, like a Microsoft Dynamics or Azure or whatever. And the third is that we can build custom apps for them. So when we onboard a customer, we can get all three revenue streams. But typically, the biggest revenue streams will come from pillar 2, which is deploying cloud or cloud-based forms for the customer, or developing platform services for the customer, whether it could be data analytics or platform engineering or IoT or whatever it is. So these are the two services which the customer will procure from you. Yeah?
Yeah. So when you, what percentage of the customers get converted to these second line verticals where our margins are very high?
What do you mean what percentage of the customer? That's what I'm not understanding.
We have, say, around 100 customers. How many of them will move towards the data and analytics and other high-value businesses where our margins are high?
So there's no formula to that. It's depending on the client and their needs and which data technology platform they're deploying and whether our service is mature or good enough for that client. So there's no formula here. I mean, that every platformation client will buy data analytics service from us. There's no formula there.
Okay, thanks. Thanks a lot.
Thank you. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Devang Bhatt from ICICI Direct. Please go ahead.
Hi, sir. Thanks for taking my question. I just wanted to know that the international IT services that you said that you're going to grow from year on 3 to 4% QOQ, that is purely organic or it includes that inorganic acquisition?
That is organic.
Okay. And your domestic business will grow in line with your guide, that 4 to 5% QOQ EBITDA growth?
That's correct.
Okay, great. Thank you. Thanks, sir.
Thank you.
Thank you. The next question is from the line of Vinod Makaria from Mohanlal Investments. Please go ahead.
Yes, good morning, Shekhar bhai.
Good morning.
Two questions. One, the hiring part which I had asked even the last time, that how are we seeing on the hiring side? Because a lot of these big IT companies are hiring, and all sorts of IT companies are hiring software engineers. So can you give some clue about what are you seeing on the hiring side of things?
Yeah, I mean, as I said, the focus is that. So definitely we are looking at a net hiring of at least 250 to 300 people a quarter.
Okay, but are you seeing any trouble in hiring, or you're having to pay more than?
So as I said, this model of lateral horizontal hiring will not work. I mean, so we have to anticipate capacity, create capacity in advance. That's the only model which will work. In the meantime, we will all join the race and try to grab the talent which is available at whatever is the price point kind of stuff. But that's not our long-term strategy. That's all I said.
Okay. Yeah. Okay. And the second question is related to, of course, Encore is a latest acquisition, and normally I've seen that usually we don't go for too many in a year. But are you looking at something in the next 12 to 24 months, or are you always on the lookout?
Yeah, I've said many times that we are always on the lookout, and there's no quota for the year.
Okay. Okay. Yeah. Yes. Thank you so much. All the best.
Thank you.
Thank you. The next question is from the line of Anil Jain from Equipassion Capital. Please go ahead.
Yeah, congratulations, Srikhar and team, on good set of numbers. I just wanted to know, I missed, I think, that part. When will the Anchor acquisition will be completed, and when new flow will come in that company?
It's been completed. I think we announced to the stock exchanges that it's completed as of the July. So we should consolidate the financials starting from August. I don't know. I'll hand it over to Jagan, but Jagan, please.
Yes, Srikhar, you are right, Srikhar. Yeah, 31st July, we have completed the closing formalities also and announced to stock exchanges. From 1st of August, it is consolidated with Sonata.
Okay. And what sort of numbers do Anchor have?
That's what I said. I said on a full quarter basis, it could be 3 million or something, and an EBITDA of about 500K. That's what I said. Full quarter basis.
Okay. Thank you, Srikhar. Thank you.
Thank you. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. I refer to your slide number 24. So I cannot understand the difference between billability and utilization. Generally, all IT companies report only utilization. Utilization. Can you elaborate, please?
States which are actually working on meaningful work, and out of that, what percentage is being charged to the customer is billability.
Okay. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Amar Maurya from AlfAccurate Advisors. Please go ahead.
Yeah. Hi, sir. Thanks a lot for the opportunity. Am I audible?
Yes, please.
Sir, wanted to understand a little bit on the dynamic upgrade. Many times you had indicated that this is a multi-year opportunity, and big enterprises are still looking for the cloud dynamic upgrade. So,
yes.
in that context, what is our strategy? How we are investing to capture that opportunity, and who are the other FI partners for this?
Okay. All partners are playing the game, so we are not the only people. Only thing I said is that we have a unique differentiator that because of our automation of this whole modernization thing which we had done. So we are a differentiator from a tool perspective. So that's what I said was the thing. So the opportunity continues to be there, and the strategy really twofold: work with Microsoft and be part of their assessment services, because Microsoft is offering to these clients a free assessment service which they pay for, because they finally want these people to migrate to the cloud. So you should become a member of the club, which then can be taken to the client saying, here is a person who will do this free assessment service for you. After that, you get access to the customer, and then there's already another partner who's already there sometimes. So after that, it's then up to you what you can make out of it.
Okay. So any targets, like, what kind of 5%, 7%, 10% kind of revenue which we can get from this kind of opportunity?
5% of what? Sorry, I didn't understand.
So I'm saying any target, like, what kind of revenue we can attract from this whole opportunity?
You mean what is the revenue market size or something like that?
Yeah. And what kind of, the quantum we can capture into this market size? Hello?
Yeah. So I'm trying to. See, the market, as I said last time, from a purely an opportunity service perspective, can be is about at least $100 million a year.
Okay.
Right. Now, what one can anticipate to get out of something like this is at least like a 10%.
Okay. Fair enough, sir. And secondly, sir, in terms of this Microsoft channel, as you indicated, there were some supply side issues, but overall, on a steady state perspective going forward, should we expect something around a 4% kind of a dollar revenue growth in the overall Microsoft business?
In general, I said, why only Microsoft? I said that 3 to 4% organic growth is possible.
Okay. Thank you.
Thank you. The next question is from the line of Jay Daniel from Entropy Advisors. Please go ahead.
Yeah, sir. As regards the supply side issue, you stated that for the time being we'll have to kind of run around for talent, but that can't be a long-term kind of solution, and we would have to look at more non-linear kind of thing. So what exactly do you mean by that?
Build capacity in advance. That means either take people who have experience but not in these digital areas kind of stuff, and prepare them to be able to deliver in advance. So that's one. Obviously, look at having more engineers from campuses. So these are the two models. Work with, I think there are now some creative, very good partners who are willing to build capacity for you, and very top kind of companies, not just. So how can you work some models out with them, and especially some, remote locations and so on and so forth. There are a lot of options which we are looking at, talking to, executing on, and so on and so forth.
Partners would be for talent. Partners for talent.
Partners who will hire, train, and deploy talent. Yeah, absolutely. The complete supply chain, not just.
Okay.
Yeah.
And
you give them the specifications and they have the engine.
Okay, they'll develop the capabilities for you.
That's right. Correct. And that will be our capacity. Whether we use them or not, we'll pay them.
Okay. So they will have the talent and you will hire them. You will utilize them as
we'll make them hire.
Okay.
And build and train and all that. So you need, if you want to scale, you need scaling in every aspect. You need enough people to train, quality control, capacity, retention strategy, a whole lot of things. So how do you scale it up is what we are looking at.
Okay. So the partner will do that for you. I mean,
one of the options. I'm saying.
Okay.
We do it. We look for partners. We're looking for centers outside India where we can tap talent. We said we have now an access to a new center in Chennai. A whole lot of other models. I'm saying it's not one strategy. There are many strategies we are putting into place, not just this, just go out and find whoever in the market and get them on board kind of stuff.
Okay. So, and this is kind of basic, but you said all platformation revenue is digital, but all digital revenue need not be platformation revenue. And within platformation, you have those three segments, Sonata Ready, Accelerate, and Custom. And within that, you said Accelerate contributes the most.
Accelerate and Custom.
And Custom contributes the most. But the Ready one is your IP one, right? Your own
IP licensing. IP-led services will again come into item 2.
Okay, that will also come in item 2.
Yeah, the first one is that you take my IP and pay me a license fee for it.
Okay. And second one also uses your IP, but it's built on a Microsoft Dynamics kind of thing. Okay. Your margins will be highest in Sonata Ready, right?
Our margins should be the highest in Sonata Ready, absolutely.
Okay. So the platformation revenue that you show separately includes all the three components.
All the three components, yeah. But where customer has said that, they have not come to us and said, I just want digital services and we are providing it. Here are the customers where we have said that here is our platformation concept, we want to implement it for you. They said, okay, this is interesting. You can start wherever in this tree of the supply chain. But yeah, and I like your concept. Please come and implement for me. That's how we are differentiating it.
Okay. Broadly differentiating, right?
Yeah.
Oh, okay. Thank you very much.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Srikar Reddy for closing comments.
Yeah, thank you, Fazan, and thank you all again. As usual, very, very good, interesting, involving conversation. Thanks for all your comments, questions, thoughts. Thanks for joining today, and look forward to meeting you in the next conference. And take care, all of you. Thank you all.
Thank you.
Thank you all. Thank you all.
Thank you. Ladies and gentlemen, on behalf of Sonata Software Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.